Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 15-minute price chart for GameStop Corporation, stock ticker GME. So we can see here that for the most part, the stock did trade a bit heavy into the Friday close. This is significant because it's not only is it a daily close, but it's also a weekly close. So this can have an effect in determining what the general tone is for the upcoming trading week. Here we will look at some specific price levels in order to determine where prices are likely to travel next week, and so that we can develop some potential trading outlooks for this week ahead. So currently, we can see that this latest sort of resistance zone has developed at some fairly predictable levels. In particular, what we would be pointing to here would be this 2480 level, which now sort of exists as a double top. As we can see here, it was first tested early during the Friday, July 26th trading session, and then again toward the end of the July 26th trading session. So we've had two tests of this level so far, and we did start to see some heaviness into the Friday close. It should be noted, however, that this is not entirely surprising to see into the Friday close. If you start to see some upward price movement in share prices, once you're getting into the weekend and things like that, people start to sort of close up shop and sort of pull positions out of the market in anticipation of the weekend, just in case there could be some major event risk that occurs over the weekend while markets are still closed. That sort of scenario can create slippage and make it more difficult to position trades. So it's really not surprising to see some people start to pull positions out of the market as the weekend is coming up, as the Friday session is closing. So that probably does explain this slight amount of this increase that we've seen here in negative trading volume into the final 15 minutes on Friday. We really didn't see that in the trading periods prior to then. This is mostly the Friday trading session as a whole, and as we can see, most of this recent bearish trading activity did occur in the last 15 minutes. So that alone wouldn't really be much of a concern in my view. It is trading a bit heavy, and you would want to see, you would rather see prices break above this $25 mark in order to, before the end of the week. But the fact that this area was tested 2 times and then failed, it's not totally surprising to see people start to pull money out of the market at that point. So going forward next week, this 2480 level really is the critical price zone at this stage, because not only do we now have a double top resistance area here, but we also have this sort of descending purple line here, which is the 100 period exponential moving average. So we do have a confluence of events, combination of technical signals that occur in roughly the same area here. The moving average itself is starting to decline past this 2480 level. So that should mean that it would be a bit easier to break to the top side. But these are still relatively, these are still close enough to sort of consider them to be in the same region. So for these reasons, I do see this 2480 level as being a very significant level to watch going forward into next week. Because as I've been bringing up here, mostly in the comments and things like that, I've been sort of asking the question, where do you think that short sellers are most likely to emerge? We did sort of point to this $30 area previously, and as we know, this is roughly exactly where the selling pressure really started to begin. Previously, we saw the downside movement start to generate during the July 17 trading session. The high here was 29.79. So this really is in anticipation of this $30 level. So there will be a real question here about whether or not short sellers believe, feel confident enough to move down their sell orders another $5. So there are a few different reasons here to explain why this 2480 level might be important next week. To the downside, we do have to be looking at these prior lows, which came in at 23.94. If we do see a break here, that could lead to a bit more follow through at that point, because the next level of support here would come in at 23.37. We do have a bit of a price gap in this region too. I can sort of move in here a bit. We can see that a little bit better here, but there is a price gap here as well, and this will need to be filled. As we can see, market prices are currently trading within that price gap, so I wouldn't be completely surprised to see a few ticks lower to start the week into this roughly 24.10 level. Because we have not yet filled this price gap. If you see a price gap like this, normally you would have to expect it to be filled, because there would still be orders left in the market that have not been tripped at these levels. So it wouldn't totally surprise me. It wouldn't totally surprise me to see a slight bit of weakness to start the week, especially given the trajectory that was seen into the final periods of the Friday session. And then there is also the fact that we do have this failure here that occurred just ahead of the $25 mark. So overall, this downside price movement into the close on Friday, it really isn't much of a concern, given the fact that we did not break these lows, which came in at 23.94. But we do have to keep in mind the fact that this price gap has not yet been completely filled. And if we do see some downward movements to start the week, the next downside target here would be coming in at 23.37. To the top side, again, this main level that I would be watching comes in at 24.80. If we do see a convincing break above there, that absolutely puts this $25 region into question. And if we do see a convincing break above there, I do think that we can see some fairly significant follow through from that point of at least a few dollars. I mean, the prior resistance zone from that stage would then start to come in again at this $30 level that we've been watching. So we can see the sort of range that's developing here at this point, with 24.80 to the top side, and roughly, you can call this roughly 23.90 to the downside. But if we do see an upside break here, I would expect to see more follow through to the top side, rather than a downside break would lead to follow through to in the other direction. So here's the current market analysis for GameStop Corporation, stock ticker GME.